It's been a mixed week across the grain markets. Wheat is drifting towards the lower end of its range. Corn is balancing exports and supply expectations. And in soybeans, the focus is on China's buying pace and a big crop out of Brazil. Joining us today to break it all down is Bertrand Oesterle, VP of Clearing and Execution Sales at StoneX. Welcome, Bert.
Morning.
Good morning. So let's start with where we are. So we've seen wheat prices edge on the lower end this past week. What's driving that move?
So as you say, wheat has been a little bit weaker over the past week, but it remains in that tight range that we've been talking about, especially when we look at Euronext. And there's been a few elements to consider. So initially, the market anticipated a WASDE report that occurred yesterday. The USDA has put out some bearish reports after bearish reports after bearish reports for almost the past year, and pre-report people were expecting it's likely to be another bearish report. So that's also contributed to a little bit more downside to wheat pre-report. Now, this report has come out and it's very muted. There's not much for wheat inside the report. If we look at the US ending stocks, they've been revised a touch up from 926 million bushels to 931, so not much of a change. And when we look at worldwide stock estimates from the USDA, they come down to 277.5 million tons from 278.25 the previous month. So nothing drastic in that report. But there's been two elements of bearish news over the past week. We've had a StatScan that came in with a December 31st Canadian wheat stock at 27.5 million tons. That was above what the market was expecting. And it's also above just under 26 million tons from the previous year.
Yeah.
And at the same time, the Russian government stated that their crop, we've been talking a lot about the cold, the potential effect and so on, and they came to reassure by saying that 97% of the crop is in good conditions. That's up from 87% the previous year. So that's the bearish part. But having said that, we've had also some elements that are likely to support, and it's mostly down to Ukraine to start with. The Ukrainians are still telling us that they are struggling with war logistics. Their wheat exports so far this season are just 8.5 million tons, where at that time last year they were at 11.46 million tons. So it's very much behind in terms of pace. And we saw APK Inform reducing its estimate or its expectation of Ukraine exports for the full year from 16.7 million tons down to 14.5. So there is really a war logistical issue there. And then when we look at export pace elsewhere, the US are still 7% ahead compared to what the pace needs to be to get to the annual target from the USDA. And then for the second week running now, we have confirmation that the EU exports are above the pace of last year. We know the data is still incomplete, so it should be even more ahead than last year, and it shows that there has been demand, and that's despite the fact that we've slightly heard over the past few days that from the start of 2026 Egypt has mostly been buying Black Sea rather than Western European, for example.
Okay, and are we seeing the same pressures in corn?
So very similarly to wheat, in corn we have the same story considering Ukraine. So the Ukrainian corn exports have been delayed as well. So far, the Agricultural Ministry is telling us that just 9.37 million tons have been exported compared to 13.27 at the same time last year. When we look at APK Inform, also they've reduced their expectation of corn exports from Ukraine from 25.5 million tons down to 23.5. So again, that slowness is slightly supportive. When we look at the USD report, it was also a touch supportive. The world stocks were revised from 290.9 million tons down to 288.98 million tons, so a small reduction. And the US exports remain so far 5% ahead of the pace required to get to the annual target from the USDA. And when we look at South America, Brazil in particular, we've had a little bit of update in terms of crop progress, and the Brazilian first corn crop is 15% harvested. That's up from 9% the previous week. And then when we look at the second corn crop, it's currently 22% planted so far.
How much soybean has China bought from the US?
So over the past week, we've had confirmation that China booked some 264,000 tons of US soybean. That's what's confirmed. There might be some undisclosed destination that might have gone to China, but we don't know yet. So 264 compared to the extra 8 million tons that we are expecting. It's a bit of a shortfall. We need to see more buying from China to confirm that they are going from 12 to 20 million tons on the first tranche. That also puts into perspective the fact that the US are still 5% behind the pace required to get to the annual figure from the USDA. The US has got some good news over the past week in the sense that India will be looking to increase its soybean oil buying and potentially reducing the tax on it. So that's been the recent discussions between India and the US, for example. But then to put everything in perspective, we've been talking about China buying 12 million tons from US origin for the past few months.
Yeah.
And very simply, ANEC yesterday put out an estimate for the Brazilian soybean exports for February alone at 11.71 million tons. So while some are struggling to do 12 million tons over a few months, some others do potentially 11.7 in 1 month. Then the other bit, when we talk about China likely to buy more, the WASDE report from yesterday is not showing that just yet, in the sense that the world stocks in soybean were revised a touch up from 124.41 million tons to 125.51 million tons. So where's that extra China buying if the stocks are still bigger?
Okay, so that's US and China. What about South America?
So the USDA has slightly caught up with the rest of the set of analysts that we follow. The USDA came in yesterday with the Brazilian production output at 180 million tons. So that's much more in line with the 181, 183 I've mentioned recently, and it's in line with that 177, 183 range. It's right in the middle. Then when we look at the Brazilian progress in terms of either crop or sales, we had some information from Safras. Safras stated that the current crop is already 33.9% contracted to be sold, but it is still behind the pace of last year. At that time, the crop was 42.4% contracted to be sold. And in terms of harvest, the Brazilians have harvested some 16, 17% of their crop already, and that's up from 10 to 15% last year. So it is currently ahead in terms of harvest pace.
Okay, so given the size of such a large Brazilian soybean crop, how are the markets expecting US farmers to adjust their planting plans?
So it's a very important question, and it's something that we're starting to talk a little bit more. It's quite a tricky one, and it could be a difficult one for US farmers. So when we look at some analyst forecasts that came in over the past week, many are saying that when you look at the return per acre over cost compared soybean to corn, it's likely that soybean is the better crop in terms of return over cost. Yes. So in that sense, people are saying we should see more planting of soybean. When we look at the fund position, they're still going shorter corn, but they're starting to go long into soybean. So it feels like we are starting to look at buying acreage. And when we look at the difficult soybean to corn 1/2 price ratio, and if we look at it on November 26 soybean against December 26 Chicago corn, we're getting to the 2.4 mark. So the 2.4 mark is not crucial in the sense that the barometer is 2.5. If you're below 2.5, you still favor corn over soy. If you're above 2.5, you favor soybean over corn, but we're getting closer to that 2.5 mark, although we are 2.4. So there is an expectation at present that the US are trying to buy acreage for soybean, and that we're likely to see, compared to last year, more soybean acreage and potentially less corn acreage. So it's all about the discussion that's going to come over the next few weeks, which is about planting intentions in the US. And it brings us to a very, very important topic. It's more of a fertilizer topic than grains itself, but we all know that Canada and China have tried to renew their ties. Trump had a bit of a tantrum saying, I can't accept that. I'm going to put 100% tariff on Canada if I'm not happy with what's going on in that deal. And that could be catastrophic for US farmers, in the sense that if Trump puts 100% tariff on everything, it means 100% tariff also on potash. Yeah. And potash is very crucial in the sense that the US import 80% plus of their potash from Canada. And potash is the nutrient of choice for corn and soybean in terms of photosynthesis, in terms of crop likely to be able to sustain drought, to be able to grow, to get protein content, and so on. So it's a very major element. So I spoke to our
colleague Josh
to get a bit more information, and it is mostly not about supply but about price, in the sense that the spring planting is about to happen. So it is likely that the potash supplies from Canada have already made it to the US, but the big question mark is how could it become a tariff retaliation weapon of choice for Canada, in the sense that if Trump goes against Canada on heavy percentages of tariffs, Canada could come back and say, well, in that case, we're not sending you any potash anymore. The price of potash could go crazy. And it's at a time when we think that potash merchants have got the supplies in the US, but it's not there with farmers just yet. So farmers are at risk that if there is a political issue, if there is a tariff issue, that those prices could quickly go up and they would have a massive amount of costs coming to them.
That sounds really scary for US farmers. Okay, finally, any new developments on Euronext Rapeseed?
So Euronext Rapeseed has been interesting as well over the past week. There's been a few elements to highlight. So first of all, the specs still remain pretty long, 24.5 thousand lots, as we had mentioned last week. We'll get an update later on from Euronext from the COT at 4 o'clock UK time. So it's going to be interesting to see if they have remained long or gone longer and so on. The interesting element is the spread, and it is also the fact that on the one hand, the Ukrainians are telling us the same as they've been telling us for wheat or corn. They can't export their rapeseed as quickly because of the war logistics. And we've had a piece of news that came to worry the market a little bit, which is China. China has had some untimely cold in their rapeseed area. And the question is, has it affected rapeseed? Has it affected their production? Is it going to mean more imports? So we had mentioned over the past week that if China is looking to buy more Canadian canola, it is supportive canola, which comes to support rapeseed, but in the longer term, it would mean that China would turn to Canada and therefore would compete less with the Europeans for Ukrainian supplies. But this time, the Ukrainian supplies are slow. And if China needs to import more, China could come to compete once again. So it's that uncertainty at present. We need to stay attuned as to what China is going to declare in terms of import needs, where it's going to get them from, and which origin they're going to pick. And when we look at the May contract, it had a bit of a spike this week. We attributed it to that Chinese news. And when we look at the May-August spread, it is already quite firm. It's very much in inverse. It's plus 22.75 high so far. And when we start to sample opinions, we've got some people saying it could go to the mid-30s, for example, but it will all depend on what the China appetite is going to be. And for the moment, what we've seen as evidence, we've seen Central and Eastern European cooperatives and merchants selling that spread on a regular basis.
Understood. Thank you, Bert. That was a lot of information to digest, a lot of good information. Thank you. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.